Welcome to the indices, and here we're looking at the S&P 500. And look, basically that 1872, as long as that holds there, then we can expect the market to push higher. Of course, it can retrace back down to the 1865 as well, but in terms of actually trading, you really want to keep your stop under that particular level there. The Chinese data today is coming out. Manufacturing data will obviously affect Australia, but it'll also affect Europe as well. Europe being, I think, sort of second or third biggest trading partner. So, and that will reflect back into this as well. So it'd be a good idea to keep an eye on that. The other important thing is the ADP figures. The private employment figures were positive. I think they were 220 up from 190 from before. And that's a really good lead in for Friday's non-farm payroll figures as well. The Feds think that the economy is looking good, so they've cut the bond buying, purchasing back as well, back to 45 billion a month. So things are looking quite sort of positive there. So all good. The Dow Jones as well, sitting above the 16,500, which is our medium level. It's important. The Dow has taken out this high where the S&P hasn't, so that's a bit of a lead for the S&P to follow. It hasn't taken out this high here, so at 16,650, I think it was, 16,650 roughly. So expect a pullback from that sort of area there, but continue to look for long trades there with further strong movements to the upside there. The DAX. Just on the daily chart here, we've been looking for been looking at this whole pattern through here, and we've sort of labeled it best fit is a triangle pattern. It's an A and a B and a C and a D and an E. It's probably arguable, but it sort of suits the case. If that's the case, then we should break through here, and as Gann the man would say, the fourth, when you got triple tops here, the fourth time is the one that it normally pushes through. So look, we've got long trades in here, so you expect I'll just drill in here a little bit. I don't need that there now. So basically, if you want to have a crack at getting to the to the 10,000, which is quite back here, is quite sort of achievable, then you need to leave your stops under the 9.5 here. So 9.496 is not really a big ask if you're going to be trading to that point there. So that's a very strong probability. We've had trades above the 9.5, or I've had trades from 9.4 to 9.5 and 9.5 to 9.6, and looking at 9.6 to go to 9.7 as well. But you might as well sort of hold and build it, continue to keep the stop under here for the time being. And because if this is 1, 2, 3, 4, 5 here, then there'll be an A, B, C across here. So having the stops under here would be safe if you can afford to hold that, and then continue to build trades all the way up, and look at adding on 9.8, which will be a profit-taking number, and there'll be resistance there. It'll be a bit rough up there, because that was the first, that is the high, the all-time high up at 9.8 there, probably some very close to that anyway. So but there's other highs that are going to be facing in this space here as well, causing corrective patterns. But look, if we're in the third wave to the upside, then it should sort of edge through quite nicely. And the same with the FTSE as well, that can continue to the upside. If you're short-term trading, then take the profit at 6.8 here. But we've basically been long from down this point here, adding, it's got potential to move further up, but there can be a reasonable swing at the 6.8 there, as I've drawn there. So it depends what you'd like to do. And also, don't forget the manufacturing figures in China today as well. It will affect this market. The ASX 200, bit of a different story here, but I think we should use the 5,500 as a bit of a line in the sand. So above that positive, below that negative. What sort of does concern me a little bit is that it's really a matter of getting which high here is in place, and in counting the move coming up from here, then this one here would be the high. And if that's the case, then this is down for 1, back for 2, down for 3, back for 4, and down for 5 here. And if that's 5 waves down here, well, then we'll get a counter trend back to the 50 or 61.8 retracement level here, and then further to the downside. In that retracement level, is just looking at then is that it can already be in place in terms of the A wave, the B wave, and the C wave in 5 waves of 1, 2, 3, 4, and 5. That may or may not be finished in there. So it can fail right from here anyway. So short traders will be will be on the right side, and they can even look to add on the 5472 here to the as retested resistance. Thursday can open higher and start trading lower, and the trick is to see if the trade lower is on lower volume in the marketplace. So you need to work out what the average contracts are per day on this market here. I also just want to point out too, it's not the case, and it's a bit of a scary picture, but I just want to bring it up while I'm here. Like I said, it's probably not the case, but in the GFC that we were looking at, the big bear market as such coming down. We've had that as an A wave. And then we've basically been working from an A wave. We've been working through a 3-wave retest of the highs up there, 61.8, which would be the A wave, the B wave, and looking for a C wave up here. And this is all around the sort of 61.8 retracement level here. And as I mentioned, it's probably not the case, but it does count okay like this. If this is all part of the corrective move here, and this is a bit tricky to work out here, but this can be wave 1, wave 2, wave 3, wave 4, and then 1, 2, 3, 4, 5 in here, and it's an ending diagonal triangle for wave 5 of C of B here, creating a top here. And if I look in the next move down from here, just on the daily chart here, and looking at that wave 4 to wave 5 here, it would work out as 1, 2, 3, 4, and then 1, 2, 3, 4, and 5 here is an ending diagonal triangle. Like I say, I don't think that's the case, but just got to sort of put it there, because if we do get sharp moves down, well, then we can, we've got some idea of what we're actually looking at. But with the DAX pushing higher, it'll probably lead higher. The Dow Jones and the S&P won't be far behind it, and the FTSE won't be far behind. If the FTSE's not far behind, well, then the ASX 200 won't be far behind either. So it's really got to do with these tops here, because it's just neck and neck here as such. And but otherwise, if this is the wave 5 top here, then this would be the A wave, the B wave, and the C wave here, and then moving up. So look, once again, it really just works out to being the 5-5 here. And also when we're working with a number as well, as you may or may not know in using the levels, is that the closest largest number is 5-5 in this case, and then we use group 2 below and group 1 above. So if support was found on group 1, well, then you know that we'll be going to the upside. If it's under this level here, it's retested resistance, spikes don't count. Then you know that the trend is the weight is on that side of the market there. But yeah, look, the 5-5 being on the right side of that, but just be mindful of Thursday can open higher and trade lower during the day. If we do have a bear day today, then it's really about the volume. You need to have a look at the volume, and especially in the afternoon session. If it's drying up in the afternoon session, then that's actually a buying signal. Okay, so it's something that you need to look at with stocks as well. Bring finance into it, materials into it. Look at the 2 leading stocks, BHP and Rio, and CBA on the other side of it. Alrighty. Look, manufacturing figures coming out of China at 12 o'clock. That will be the catalyst for any move. Cheers.